Hello and welcome. This is Get Set Taxes, and in this video we will break down the GST Composition Scheme. The Composition Scheme is a very simple, hassle-free compliance scheme for small taxpayers. Mainly, the scheme is for small businesses to reduce the amount of paperwork and the tax that they have to pay. There are three major benefits to this scheme. With lesser compliance to be followed in terms of keeping books of record, taxpayers now need to file fewer returns and can sidestep the need to provide tax invoices. Composition dealers cannot charge GST on their sales, so the end consumer pays less money than usual. As a business, this means that composition dealers can sell a product at a lower price than regular dealers, giving them a competitive edge in the market. From the financial perspective, reduced tax liability via the fixed rate translates to higher levels of liquidity for the business. With more liquidity, you can maintain cash flows better, which will help you sustain operations smoothly. Normal taxpayers need to submit 3 monthly returns and 1 annual return, taking the total to a whopping 37 returns over the course of the year. However, if you've applied for the composition scheme, GST filing gets easier as you need to file just 1 quarterly return and 1 annual return, which is a much more manageable number. The composition scheme limit under GST varies depending on the type of business you have. For manufacturers, traders, and restaurants not serving alcohol, the turnover limit is Rs 1.5 crores. For service providers, the turnover should not exceed Rs 50 lakhs. If a business is a mixed enterprise with services and goods, then the service portion of the total turnover should be a maximum of 10% of turnover or Rs 5 lakhs, whichever is higher. Additionally, the Rs 1.5 crore cap is further limited in special category states to Rs 75 lakh. It must be noted that the GST composition limit includes turnover for all businesses registered under a particular PAN. Upon registering for GST composition, a fixed tax rate applies to your business turnover. The current rates are as follows. Manufacturers and traders have to pay 1% of their turnover as GST. Restaurants not serving alcohol have to pay 5% of their turnover as GST. Service providers have to pay 6%. The taxes must come from your own finances as you cannot charge consumers and include taxes on supplies made. The following are ineligible to opt for composition scheme. Taxpayers making intrastate supplies of goods. Taxpayers making supplies of goods through e-commerce operations. A casual taxable person or non-resident taxable person. Manufacturers of ice cream, pan masala, tobacco and aerated water. While GST composition is advantageous, there are a few pitfalls to the scheme that you should be aware of before registering. Businesses under the composition scheme cannot claim any input tax credit. This includes B2B businesses as well. Thus, they cannot pass on any tax credit to their buyers, which results in price distortion and cascading. This is a loss of business. Eventually, such buyers might avoid purchases from a taxpayer under this scheme. Taxpayers are not allowed to recover composition tax from their buyers, as they are not allowed to raise a tax invoice. Thus, the tax amount payable must come from their own finances. Business is restricted geographically, as GST composition does not cover interstate transactions. They also cannot leverage the potential of the internet, as supplies of goods via e-commerce portals is also restricted. In case you deem the scheme profitable, you can apply for it online via the GST website at www.gst.gov.in. Then you need to file GST CMP 02, as this serves as intimation indicating your readiness to come under the GST composition scheme. If you need any help or clarification regarding this scheme or any other tax matter, you can also contact us. We will be glad to help you. Thank you for watching. This is Get Set Taxes explaining the GST Composition Scheme. See you in the next video.